Hey there, welcome to Bitcoin Wyckoff technical analysis. Last week we talked about by September 23rd, the latest, Bitcoin will break out, and indeed on the 21st it started its first move, but pretty small. And then immediately following on the 22nd, it broke to the downside, and over the past few days it broke even further through all the way the intermediate support. So let's quickly take a look in both the weekly and daily time frame and see what's going on and what's in the build-up. Here, we go back to the weekly chart, and as we can see, this LPSY, the last point of supply, has already formed. So we had our automatic reaction back in late August, and then for the past 4 weeks, this little peak has developed. So this peak over here, that's the LPSY. And assuming it's still the blue scenario at play, not the yellow, though it doesn't differ much, because for this, even if it's the yellow scenario, it can still be an LPSY. The only difference is the peaks, whether it's an upthrust of the distribution or was it an upthrust during these 5 weeks from mid-July all the way into mid-August. Now, fast forward, if Bitcoin is really finishing its distribution cycle, that means it's going to test the purple key level of 104K. And not only that, it will also test this bottom edge, this pink box, the bottom edge of the pink box. This pink box is basically the upward channel box of the uptrend that started back in October 2023. So almost 2 years now. So this uptrend, if I extend this uptrend channel box further, you can see it actually started way back 2 years ago. I'm just including the wicks, make sure all the wicks are in the channel as much as we can bring them in. So let's take a look to make sure, okay, this wick is here, this wick there, the buying climax wick is there, so that looks fine. So I mentioned in the previous sessions, so this upward channel is over, we can take it off. In previous session I mentioned about one thing. Usually within the channel box, the price will bounce between the ceiling and the bottom, and then back to the ceiling, back to the bottom. This time, however, no matter whether it's the upthrust or upthrust of the distribution, this did not reach, well, if I include the wicks, this did not reach the ceiling, and it's already turned towards the bottom again. So depending on what happens in the next few weeks when the price eventually challenges the 104K key level, it may eventually come down to test the bottom edge of the pink box, the upward channel box, and maybe even break out to challenge the 91K support level. So it's a key level. When the price is above it, it's support level. When the price is below it, it becomes a resistance level. So that's how the big picture is happening right now. And when I say in the title that a bigger build-up is like in the cooking, look at the Bollinger Band Keltner squeeze. I switch off the drawings for the time being. The bottom purple edge is within the orange already. The top is getting closer and closer. So for the next 2 weeks, if the price continue to trade in a narrow range, this will bring the purple into the orange, meaning a squeeze is officially happening according to the indicator. For me, I would consider it already started, because one side is in and the other is close enough. So last time when a squeeze happened, you see these two vertical bars, right? So this entire squeeze period from, according to my own definition, starting of July all the way into end of October in 2024, and then the price got squeezed up to where we are now. And when this squeeze happens this time, it doesn't guarantee it's going to the upside, because sometimes when the squeeze happens, it can swing to the other side. So be really careful, because combining this with the Wyckoff stages, the likelihood of swinging towards the downside is getting higher and higher. So like I said, these two key levels, 104K and 91K, are the first two stops, in addition to the bottom edge of the upward channel box. And also, even though it's skewed, this looks like a head and shoulder pattern for the candlestick pattern analysis. So again, another indication that the price may be heading towards the downside, and this time it may be even deeper. So if you ask, like, after these two stops, is it possible to go even further? So these tags, I've already added them there for a couple of sessions already, and I'm still keeping this 80% towards the sign of weakness. So this spot, this level of 74K, was where we were back in March this year. So only half a year ago, or less than half a year ago. So if people are saying it's not going to happen, not going to go back down to below 100K, be mindful of how truthful that is, because when money can go in through whatever channel, ETF or whatnot, it can come out from those channels as well, and they can come out much quicker than we can like think of. So that's the big picture. Volume itself, very steady. It can come down as steady as well. Let's go to the daily time frame. So in the beginning, we already talked about this cross that I showed in previous session, pointing towards the latest by September 23rd. It has to break out, and indeed it happened right before the 23rd. And now, since it has dropped that much, what are we going to expect, right? So since this uptrend support line, this green line that lasted for about 23 days is over, we can take away this line. And is there any trend that's forming? One that I can see is potentially a downward trend. So remember, in the weekly chart we saw the upward trend, but here it seems to me this downward trend is forming, or has formed. So if I enlarge this just to make sure I have all the wicks included, and adjust the slope as well. So the bottom, just to make them tighter, now it looks very close. So we've got this wick over here, the second, the fourth, the fifth. So this box is pretty solid to me, that a downtrend has formed, and currently is, I mean, the price is hovering right below this intermediate support, or like resistance level for the current stage. This level is extended from the buying climax back in end of May, and also the second test during mid-June. So like I said before, why I determined key levels with at least 4 price references, that's exactly one example. So this, we had only like 2 to 3 reference points over there, and they aren't very strong reference points as well. So when the price dropped right on Thursday, it poked straight through this intermediate level, and then currently the price is trying to find support at this level, where the sign of weakness back in late August and early September was. Hey, I've got a message, rock and roll. Could the price be manipulated by institutions, since this cycle many more financial services are involved worldwide? So good question, and I would say it's always the case, unfortunately. And whether um, there are ETFs or not, the financial institutions always, even since like the time 2-3 years ago, they already had ways to access to crypto. So it's not that they don't have access, but I agree that more institutions, especially the listed institutions that has to report crypto exposure on their books, um, their participation may play a role in this, but then still, the well, according to Wyckoff's terminology, the composite man has always been there, even since 2020-21, when we had the crazy bull cycles back then. So back to here, I was talking about the sign of weakness, and I believe I can take out this question mark now, and also I can bring across this, because this is actually coming down to form another sign of weakness in my view. This LPSY is confirmed, so I can take away all these tags. So remember I said when I first started putting Wyckoff tags into a daily chart, I already mentioned it will be very messy in a daily chart if we apply the Wyckoff method. Look at all these tags over there. But it's interesting as well, because in the weekly chart, it's a lot more cleaner, and for people that enjoy the complexity or high frequency, this would seem boring. But if you look at the daily chart, look how busy that is with all the tags. And so as long as, like while we're talking, we're at sign of weakness, it may not be over yet if this downtrend is really is really the case that it's going to extend further. So if I extend this all the way to the right hand side, I'm trying to find a point where the ceiling touches the purple key level of 104K. And as of this moment, if the price continues to travel above the purple key level, eventually by early December or beginning of December, it has to break out again. Basically, this is another breakout point, and more importantly, that place is actually a cross of 3 lines: the purple key level, the bottom edge of the upward channel box, the bigger one, the pink one, and then this smaller downward channel box. So this point, somewhere around the first 10 days of December, that's going to be very critical, assuming the price still continue to trade within this range between 111K to 104K. Hey, rock and roll. So in my opinion, is the price action normal at this point in the cycle? So just trying to learn why it keeps dropping. Thank you for your videos. Yeah, no worries. Yeah, it's normal, because if I marked the Wyckoff stages correct, what we are expecting is the end of the distribution cycle, meaning after upthrust of the distribution, or even upthrust, the trend will die down and eventually comes back to a point where Bitcoin start to accumulate again. So if I shrink this further, if we look at what happened back in 2021 to 2020, mid 2022, right? So we had the buying climax in February that year, and then it had a couple of second tests, and eventually came down for a sign of weakness. Then back up to the upthrust in November that year. So from the beginning of the year, the buying climax, to the upthrust, it took almost a full year for that to happen. This time, we had a buying climax back in March 2024, and then, like coincidentally, near the year end, after 9 months, we had the upthrust. So very similar. So that was February all the way to November, 266 days. This over here, the buying climax to the upthrust, 273 days. So it's roughly 1 week apart. So it's the timing, like you said, seems like there's somebody like making that to happen, like in an orchestrated way. So what we have in addition this time is this final leg towards the upthrust of the distribution for the blue scenario. You can forget the yellow one for the time being. Just focus on the blue text. So if this is really the upthrust of the distribution that we did not have during that distribution Wyckoff distribution cycle back in 2021-22, that's where the price is going to start to come down to a point where there is sufficient support, say a lot of people buying the dip, and it doesn't go any further. That will be the selling climax. So the selling climax back in June 2022 was at a very low point of 18,000. A lot of people think that would not happen again, given all the developments that has happened over the past 2 years since October 2023. Now we're getting into October 2025, exactly 2 years from the point where the accumulation finished and shot up all the way to the peak now in the distribution cycle. So would the price get back to the long-term playground zone, this white box over here? People say I'm crazy by drawing this box over there, but we never know. The only thing I would adjust is probably to encapsulate the entire accumulation cycle back in 2023. So assuming that this is the case, I'll adjust the box upward by a little, and yeah, let's put it this way. So essentially, this long-term playground zone, when I define it, it should be 80 to 90% of the time that asset would trade within this long-term playground zone. But now it has kind of already broken it, because this, you can call it bull run, but in Wyckoff distribution, we call that the distribution cycle. This distribution cycle has already lasted for almost 700 days, and it's still counting. So it has caused this to have a need to be adjusted. So I just made a tiny adjustment over there, but if I have to adjust it according to the rule I set, it would probably end up be something like this. In order to make or meet the requirement that I set, it has to cover 80% to 90% of the price actions over the long-term course. So after adjusting, there's still a chance for the price to come back down to the 74k level or even 62.5. So those are still possible, while the levels below the red may be less likely. Not that it's completely impossible. So be very careful when I said earlier in the beginning, the Bollinger Band Keltner squeeze is showing the weekly is coming together for another squeeze, and because of the declining momentum that we see, let's turn these all off. So you see this is following a curved, if I draw a line above the peaks, it's not a straight line, it's curving downwards. So you see the pink straight line over here, right? And then now it's flattening. So this looks like a weakening trend, and like I said, if it's really finishing the Wyckoff distribution cycle, it's very normal for the price to eventually come down. But of course, it won't be a straight line. Look at what happened back in 2021 and 2022. It dropped, it had some sideways trading, and then dropped further, and then sideways plus a little bit upwards. Those two last point of supply was there. It's all Wyckoff stages that expected, and then eventually it start its real leg downwards all the way to the selling climax. So this time we are trying to see when this sign of weakness after the upthrust is going to happen. So That's why I marked these two at the 74K level, because that's where the automatic reaction was back over here after the upthrust, or you can call this actually for the blue it shouldn't be an automatic reaction. It's actually a sign of weakness for the blue case. So automatic reaction was there after the upthrust, and then but the price dropped to this 74K level back in March. That's a sign of weakness, and now we're at the upthrust of the distribution. I mean, post upthrust of the distribution with the first LPSY. So the price, even though that it may come down, it can still bounce. It's not going to be a straight line, and there would be more LPSYs coming, but in the weekly chart it's going to take weeks or even months to develop. So I'm not drawing the text like I do in the daily chart, where we are expecting the sign of weakness, well, possibly already happened or finished, and it's going to show us potentially another LPSY if this is really a downward channel box or a bull flag, like people say in the candlestick pattern analysis. So it can bounce up, form another LPSY, and then come further down to a lower level of sign of weakness that matches those of the buying climax stage back in May this year. So it's a very long answer, but yes, it's expected, and it's also why the price is declining, because that's the late stage of a distribution cycle. That's normal behavior. Okay, so Bitcoin, very interesting year, I would say. Actually 2 years now. If you look at the accumulation cycle finish, when the accumulation cycle finishes, and then we have this very long distribution cycle, and if it really comes down, I hope it isn't too bad, but we have to always be prepared. So always remember to set your stop loss, even though you think Bitcoin is still going to go up because of whatever reason, like interest rates declining, or other factors, like if you think the governments around the world is going to print money again, that's going to bring Bitcoin's price up. Any reason, if you put in an order expecting it to go up, don't forget to set a stop loss, especially if you're buying the dip at the moment thinking, oh, it has dipped like quite a lot, and looking at what happened back in late August, it may be a time that it will rebound. While that may be the case, be really careful that the downtrend may not have finished yet. So thanks for joining me for Bitcoin today. I'm going to the next session. See you over there.